Westpac was the first ever bank to be established in Australia. Since then, it has expanded rapidly with a multitude of offices across the globe. Early on in the week, we spoke to Richard Franulovich from Westpac in New York. Today, though, DukascopyTV is joined by Jonathan Cavenagh, a Singapore-based currency strategist from Westpac, to discuss how the Eurozone and US troubles are affecting some of the Asia-Pacific currencies. First, Jonathan, let's talk about some of the antipodian currencies like the Kiwi dollar and the Aussie dollar. How have they been holding up in this volatile market?
Well, if we look over the past few weeks, both currencies have generally been in a downtrend, not only against the US dollar, but also some of the other major currencies as well. The backdrop has not been good for either currency pairs, and that reflects a few things. Obviously, the situation in Europe is creating quite a deal of risk aversion in markets, and that's generally seeing investors shun riskier asset classes, and so that's weighing on commodity prices. It's also driving increased concerns about global growth, and that type of environment is typically not a good one for either the Australian dollar or the New Zealand dollar.
Well, investors get a string of good news coming out of those troubled economies, then risk appetite returns, but as we know, it's only for a limited period of time. What kind of developments will have to take place in order for this to last?
Well, I guess we need to see some type of resolution or some type of initiatives put in place by the European authorities to really shore up confidence in the European financial system. That still seems some way off in our view. The European authorities still have a lot of problems to deal with. It's a different kind of crisis to 2008, where generally that was seen more as a liquidity problem for banks. So it was quite easy for the ECB to step in and provide liquidity. The ECB is doing the same type of thing this time around, but the biggest problem is now more of a solvency issue, particularly for economies like Greece. So this, whether or not other European countries are going to continue to be prepared to bail them out, etc., obviously remains an open question, and that's what's very concerned about the market. It's reducing investor confidence, it's reducing business and consumer confidence, and we're seeing around the world private and official forecasters are revising down their global growth outlook.
During the past week, the yen was strengthening slightly against the dollar and substantially against the euro and other currencies. As we both know, the yen is perceived as a safe haven currency, which investors flock to in times of uncertainty. But after speaking to a colleague of yours from Westpac in New York earlier this week, he explained to me how at the moment longer-term trends are pointing to a weaker yen. Why is that?
It's very difficult to build a positive medium-term outlook for the yen. If we just look at the Japanese economy in isolation, it obviously suffered the terrible earthquake earlier this year, which disrupted economic activity quite severely. But even abstracting from that, Japanese economic growth was not great and hasn't been great for quite some time now. The Japanese central bank is running a zero interest rate policy, and that's not likely to change anytime soon. Japanese households are not consuming as much as what other developed economy households are, so domestic demand is quite weak within the Japanese economy. Their main source of growth is the external sector, so i.e. exporting to other nations, but with the yen as strong as it is, that export competitiveness is being eroded. So from an overall growth perspective, it's very difficult, as I said, to build a bullish long-term case like over the next 2 to 3 years for the yen. So if the US and Europe can kind of get some on a more positive footing with some of these issues that they're facing at the moment, and that at this stage still remains a big if, I would add, but in a few years' time we should definitely see the yen at weaker levels than what it is now.
What about emerging Asian currencies like the South Korean won and the Singapore dollar, for example? When do you think the market will regain some more confidence in emerging Asian assets?
I don't think the market's lost a great deal of confidence just yet in terms of some of the emerging market asset classes. It certainly has in terms of equity markets. So generally what we've seen is that investors have kind of generally been moving out of emerging market equities, but they've just then not so much, the money hasn't so much been pulled out of the economies per se, but it's more just been shifted into the local bond markets. So we've seen pretty healthy inflows into the South Korean bond market, etc. So foreign investors are not aggressively dumping these currencies yet, because if you're a foreign investor and you want to leave Korea indefinitely, there's not too many safe haven choices out there. So we probably really need to see risk aversion kick higher to really see a so-called flight to quality out of emerging market economies in Asia. That hasn't happened yet. It's kind of happened at the edges, but not in an aggressive fashion like it did in 2008.
Thank you, Jonathan. I'm afraid that's all we have time for today, but that was a great update on how some major Asian Pacific currencies have been faring recently and a near-term outlook. That's all for now, but do stay tuned on DukascopyTV. Goodbye for now.